Hi, everyone. Good afternoon. Welcome to this chat, and thank you for making the time to be a part of this conversation, which is extremely important in the current times, being mindful of all that we've seen happen in the stock markets and overall in the economy and in the global situation. It is important, and which is why Basis it has initiated this conversation to try and understand how we should tackle our money in the current situation. A couple of you have sent us your questions already. For those who haven't and do have some questions in mind, please drop them in the comment section and we will take them up later in the conversation. Firstly, let's just try and understand what has happened in the recent past, especially in the last 2 to 3 weeks, where we've seen such falls, not just in the Indian stock markets, but in several international markets as well. What initially started as a speculative fall after the announcement or after the cases of the coronavirus being reported, which really in the Indian market scenario fell into the yes bank trap. And ever since, there hasn't been much good news. To encourage us to continue investing. And a lot of questions that we've been getting is as simple as should I continue my SIPs in the current times? And we will come to that. But firstly, to establish context, let's try and understand that market falls are not something which are completely new to us. Since 2004, in fact, there have been over 15 falls in the market, where each time the market has corrected between 8 to 10%, which is literally, if I can count, one significant fall in every year. And at all times, we hear things like buy low and sell high, but it's not always something that's very easy to execute. At such times, which we are seeing currently, things like human biases of fear and greed come into play, and they can really blindside our investment decisions because currently what we are dealing with is euphoria, it is hysteria, it is some distress signs which we are seeing and could really push us to make decisions which may not be very smart for our financial future. If I just talk about the last 1 or 2 years, we've seen a string of news from across the globe. In some cases, good news. In the recent past, a lot of bad news. The continental fires in the Amazon and Australia, the US China trade wars, the US Iran conflict. We've seen Brexit. We're now dealing with the coronavirus. So, if you look at all of this that has happened, of course, there have been some economic changes or economic signs which in India specifically started, if I could say, as early as 2016. There was the whole oil crisis scenario starting in 2016. 2017 in India itself was when the whole INFS situation happened. What happened in 2019 was the whole PMC bank. We were hearing news about so many other chit funds, etc., going down. So, what is happening currently now, it is not as sudden as you might imagine. This news has been coming for some time now. And yeah, I think we shouldn't make any decisions because it's not very sudden. The market usually factors any such news much ahead of. The actual event. So a lot of what has happened has been cushioned into the market changes over the last couple of months, or I would say even the year and a half. For those who are not very familiar with what happened on Friday, a lot of us were taken by surprise when early into the stock market, which usually starts at about 9 a.m., there was a fall of over 3,000 points in the Sensex when the market was then shut. So that's called a lower circuit when it hits beyond a certain percentage of fall. There was a lower circuit. Markets were closed for about 45 minutes and begun after that again, where we did see some positive signs. But coming back to understanding what has happened right now is not entirely a crisis that can be compared to 2008 and 2009. What happened in 2008 and 2009 was a lot of a lot of difference or fall that can really be indebted to human failure. So when the Lehman Brothers fell, or all that followed, the mortgage-backed securities that failed, all of it was driven by bad, I would say, bad human decision making. But what we are seeing currently, especially with the whole speculation and the whole scenario after the coronavirus, let's understand that this is a medical situation. This is not entirely a financial situation. Yes, the effect of which has hit trade between countries. As we have heard in the last couple of days, there have been travel bans issued by the US for any travel via Europe, etc., which very logically and for any common person, it is essential to understand that these are normal things that can affect trade between countries. They can affect industries such as tourism, etc. If you might have followed very recently, we have seen some changes, or in fact, I was just discussing with a colleague a little earlier today. We've actually seen a rise in stock prices in the US markets on really tools that help you work from home. So this is not something we've seen before or anticipated before. So let's first really put ourselves in a place of logical understanding that yes, we are dealing with a crisis globally, which beyond a point may not entirely be in our control. But if we just look at the numbers of day before or yesterday, even where this actually begun was Wuhan in China. And if you see the numbers of yesterday, there hasn't been even a single report of any case from Wuhan, which is a good sign that China has managed to contain the virus, which also would soon, we would see positive news from Iran, Italy, South Korea sooner than later once countries are able to contain the virus, and better times are lying ahead of us. Also, we have seen what happened with Yes Bank, and it is not easy for the government to let any financial system fail, which is why soon enough we saw news that followed that SBI will play a part in really reviving what's happened with Yes Bank. We've seen announcement from the financial ministry saying that they will not allow this bank fail. We've seen news that there will be other banks such as ICICI Bank even who will participate in really redeeming whatever has happened there. And overall, the Indian financial system is not that weak that we cannot withstand such jerks, if I may call them. These are sort of short, small bumps on the road, which happen every couple of years. And a lot of people have been wondering, should we stop investing currently? Should we pull out our money from mutual funds? Should we? Is it a good time to even buy stocks? Perhaps. And a lot of women on our community have been posting questions with specific stocks, asking us if we should buy A or we should buy B. So just to reestablish how we should be investing, I think the fundamentals haven't changed one bit. Importantly, for those who have your financial goals, which are 3 or 5 years away, we will still say that you stick with your discipline and commitment of investing. A lot of you have been asking us, should we stop SIPs in the current scenario? I think that would be an absolute mistake. People made that mistake back in 2008 when the markets fell from 21,000 levels to about 7,000 levels. People stopped investing, they withdrew their funds. But those who really like stuck through the course of that time, continued their SIPs, continued their discipline investing, are now sitting on huge gains, especially because they had the clear sight that their financial goals were a couple of years away. So if you did start your SIP a year ago, you did start your SIP even 2 years ago, you are possibly looking at negative returns on your funds. I would say do not be worried. Not a smart thing to do, but if possible, don't check your portfolio very frequently if it will make you make emotional decisions rather than knowledge based decisions on your portfolio. Continue your SIPs. In fact, if possible, if there is some liquidity available to you, increase your SIPs even. These are good times for people to continue investing, or even for people who are first time investors. These are good times for you to get started on your entire investment journey. We could also see some changes from April, depending on how things pan out from here. We're still about at the 15 on the 15th of March. We still have this financial 15 days of this financial year ahead of us. We could see changes from April, things that could be announced by the financial ministry, which would ease out our concerns. There could be things we've been concerned about, things even like the change in the tax regime, which we haven't been able to fully understand. And as we understand currently, there have been vast changes and many events since that announcement. We could be seeing some things on that front that could ease things for investors or any average Indian working professional in India's economy. It is also important to understand how these bank defaults function. As we have seen, and usually these typically start from medium sized enterprises, where at times when there is a stretch, they are not able to pay off the suppliers who are probably giving them tools, etc., to run their companies or run their functions. They're not able to pay the suppliers. Then going forward are not able to pay the banks, which is where the problems usually begin. But as I mentioned earlier, the government has stepped in very quickly to ease tension on that front, and we've seen the market really respond to that as well. As we speak right now, I cannot really guarantee what we're going to see happen tomorrow morning at 9 a.m. when the markets open. But rest assured, if you do have financial goals, as I said earlier, which are 3, 5, 7, 10 years away, and you are investing for that purpose, do not be worried. Of course, do not just sit blindly as well. Stay tuned on any ongoings. At Basis, we do keep you informed fairly regularly in the scenario that you should be making changes in your portfolio. Also, for those invested through the Basis app and for those who are not, do understand that in our risk profiles and in the recommendations that we make for you at Basis, we have factored in a lot of uncertainties. Uncertainties such as the financial ones, and uncertainties such as the ones we're seeing in the current scenario. Even in our most aggressive risk profile, we leave some liquidity and some cushion for comfort when it comes to your money. So at Basis, when we've built our algorithms, when we've built our recommendations, we factored all possible uncertainties. And we've also realized, and we've discussed with the women in our community fairly regularly, that as women, we are not looking at gains over the next 3 months, 6 months, 10 months. As women, we look at consistency of returns on our portfolios. We really are very goal centric. Knowing that we need the money a couple of years from now. Yes, there could be things that may not look so comfortable right now, but knowing fully well of all the aspects that come into women's decision making, we factored those in the advice that we really dole out to you. A lot of people are also worried in terms of just leaving their money in the bank as well. As you might have seen in the recent budget, there was also an announcement saying that your bank insurance, which typically meant that if you have 5 lakhs in your bank account and the bank went down for whatever reason, you have 1 lakh worth of insurance which would be paid back to you. In the recent budget, the government went ahead and announced that that has been changed and that amount has been increased to 5 lakhs. So that is one reason that we shouldn't be too worried. And besides of that, just reiterating, we need to maintain our sanity, because what we're seeing now, as I said earlier, is not entirely a financial crisis. Yes, we have seen in the recent couple of days where there was also an announcement of Russia and Saudi Arabia, which usually really define what happens in the oil markets. globe, there have been a small feud on that front, which really works in favor of countries like India. When oil prices fall, if you may not know, India imports almost 84% of the oil that we consume as an economy, as a country. So things like this actually work in our favor, not to be too worried on that front. With which, as we continue this conversation, I'm also going to pick up a couple of questions that we've got from members of our community. So we had one question from Shweta Pachlangia, where she asked us, what has caused the sharp reaction in the equity markets worldwide? Is it just Corona, or are there other factors in play? Shweta, like I mentioned earlier, equity markets worldwide have seen changes or have seen factors that would affect us since 2016. Unfortunately, the timing being such that when it rains, it pours, everything has happened all at one time, which is why we've seen a sharp reaction in equity markets. It is not just the Corona incident isolated, but a lot of other factors, like we mentioned, whether it's Brexit, whether it's the oil crisis, whether it's a banking crisis. And if you speak to people, you also realize that the stocks in the US even looked extremely overpriced. A lot of that has been factored into the drop that we've seen across the globe. Her next question being, we have seen multiple incidents in the past which have caused underperformance in debt funds as well. In such scenarios where both equity and debt options are under pressure, how should an investor choose their investments? Yes, I think these times could be times which would really set us to worry, when it looks like, nor equity is doing so well, nor is debt really doing well on that front. However, if you do go back and look at the funds, the debt funds specifically, the liquid funds or the overnight funds, which have been holding good papers not of the nature of a Vodafone, Yes Bank, etc., there hasn't been too much cause of concern on those funds. So if you are evaluating, should you continue investing in debt funds, or should you hold on to what you already have, please do revisit and see what are the papers that those funds are holding. If the ratings of those papers are good, it should not be something that really should set off an alarm for you. What signs should we look out for to understand the recovery process has restarted? I think that will take some time. I'm not going to pick up that question now, because we will send out a note once we ourselves identify if there are signs out there that really tell us that things are settling in. We also had a question from Shipra Baranwal. If there is some spare money available, what should be the current investment strategy? Should I top up my current mutual funds or something else? Shipra, I think it's a very simple decision making process here. You need to revisit your asset allocation. There could have been changes there, considering the fact that equity markets have fallen. There could have been a significant fall, anywhere between 10 to 30% on your funds or stocks that you might be holding. But as I mentioned earlier, if your long term goals are clear in sight, you know what you have in mind, if those funds are meant for your retirement, if they are meant for objectives which are 5 or more years away, it could be smart to continue topping up on ensuring those values are in line with what your asset allocation needs to be overall. So we have a question from Suparna. For the future, what is a good way to identify and capitalize on such market behavior? Many people are saying to invest, the best time to invest was 1 week ago. Now it's too late. How does one identify too late or too early? Suparna, I think as we tell everyone, the best time to invest is now. It is today. We're never going to get timing right, even as professional advisors or planners. Even on our own portfolios, I can say that it's not always that we get timing right. The only way that you perhaps can factor in timing is by sticking to the discipline of investing, whether it is your SIPs or any other form of investments that you were doing in a regular discipline committed manner. So if you did have SIPs that had deductions last week, you would have benefited from that fall. And we really don't know what lies ahead of us from this point as well. So continue your SIPs. As I said earlier, if you can increase those, and really don't be worried about timing. I think it's a very cliched quote, but it is not the timing that you need to get right, but it is the time that you actually spend invested in the market. And I think as investors, we should remain focused on that bit. Just checking in for any other questions that we have. I don't see any other questions at the moment. But just to reiterate, continue staying invested. We will keep you abreast with any changes that could affect your portfolio. At basis, we have informed you frequently as things have happened in the markets and what actions you should be taking or you shouldn't be taking. So keep your long term goals in sight. Don't check your portfolio too often. Don't do it on a daily basis. I keep telling people this. If you are holding some real estate or land or an apartment, there is no way that you can check that value every day. Similarly, I wish there was a possibility that you couldn't check the value on your funds on a daily basis because it gets us really worried. Don't do it in current times, especially. Continue staying invested and be patient. And as I said earlier, for those who are first time investors, it is a good time to start your SIPs. And as we mentioned, that at basis, we have evaluated and assumed all possible risk scenarios when we make our recommendations to you. With that, I am going to quickly wrap up this question. So we will drop you a note as well with all the questions that came up from this conversation. Please subscribe to our YouTube channel and stay tuned, stay informed, which we will keep you informed on a regular basis. Thank you very much. Thank you to those who dropped in your questions. Feel free to interact with the community in our app, ask us more questions, understand from women like you, and yes, continue sharing the knowledge.